Hi everyone, today our group will present about sale and service tax. Hi, my name is Asyiqin and I will brief to you guys about the sale and service tax. Sale and service tax is the current major consumption tax levied on selling goods and services in Malaysia. SST were reintroduced in September 2018, replacing the Goods and Services Tax (GST) regime that had been implemented in April 2015. The shift back to SST was aimed to address public dissatisfaction and administrative challenges associated with GST. So how is SST administered? SST, on the other hand, is the administration process with less cumbersome documentation, making it a more business-friendly tax system. The most significant update for 2024 is the rise in the SST rate for broad range of services. Previously, at 6%, the rate has now been adjusted to 8%. This applies to various industries including accommodation, professional services, and digital services. While the majority of services now face the increased 8% rate, some essential services continue to be taxed at the previous 6% rate. These include food and beverage services, telecommunication, logistics services, and vehicle parking. So that's all from me. Next, I will pass to the next presenter.
Hi and Assalamualaikum. I am Nurul SALINAH. I'll be continuing in explaining the structure and types of SST. There are two structures of SST. Firstly, sales tax. This is a single stage tax levied on the goods that are either produced domestically or imported into Malaysia. It is applied at the point of sales, meaning that it is collected at the moment the goods are purchased by consumers. Not only that, sales tax rates vary according to the kind of item, with usual rates ranking between 5% and 10%. For instance, petroleum goods and building material may be taxed 5%, but certain luxury items may have higher rate. On the other hand, in SST, we also have service tax. Service tax imposed on taxable services offered by registered providers in Malaysia, including car rentals, accommodation, and telecommunication. The current standard rate is 6%, with a proposed increase to 8% effective on March 1st, 2024. Moving on to the types of SST. There are two types of SST, which are taxable goods and taxable services. Taxable goods include various categories like construction, material, petroleum, and certain luxury items. Basic foods and instructional supplies are free from sales tax. Next, taxable services. Services subject to service tax encompass hotel accommodation, legal services, as well as consultancy offering. Some services may qualify for exemptions or zero rating based on specific criteria. That's all from me. Thank you.
So for the third section, which is how the businesses are registered for SST, which is the sales and service tax. So I will guide through the process of registrations for the SST in Malaysia. So for the first step, which is the determine eligibility, the first step is to check whether your business needs to register. This depends on your annual taxable turnover, such as if you're providing taxable services, the threshold is 500,000 ringgit. Meanwhile, for businesses that selling taxable goods, the threshold is typically 500,000 ringgit as well, but certain categories may vary. If your business crosses this threshold in any 12-month period, you must register for SST. So for the second step, which is register online on the My SST portal. So once you're sure your business is eligible, head to the official MySST portal at mysst.customs.gov.my. Here you'll find out the registration form. It requires basic information about your business, like your annual revenue and the nature of your taxable goods or services, and then lastly submit the form electronically for review. So for the third step, which is the approval and effective date. After submitting your application, it will be reviewed by the Royal Malaysian Customs Department. If all details are accurate, you will receive a confirmation email with your registration number. You will also be assigned an effective date, which mark the start of your SST obligations. And then Then you need to keep accurate records and begin filling your SST returns after this step. So for the last, the final step, which is optional, which is the voluntary registration. If your business doesn't meet the threshold, but you still want to register, for example, to enhance eligibility, to enhance credibility with clients, you can apply voluntarily. This is also done via the My SST portal. But voluntary registration requires you to comply with all SST obligation once approved. That's all.
Assalamualaikum and hi madam. My name is IQRAM FAUZUL and I will continue with the section 4, which is drawbacks faced by businesses due to SST. So firstly is complexity and compliance. SST add extra administrative work requiring businesses to keep detailed records and file tax returns regularly. For smaller businesses, this is challenging as they may lack dedicated accounting staff and the tools to manage the workload, leading to time-consuming manual tasks. Secondly is cost of implementation. To comply with the new tax, businesses must update or replace their accounting systems as most of existing ones are not SST compliant. Both the company and system developers are responsible for creating a suitable system. This can be costly, particularly for small businesses, which may need to invest in new software to meet SST requirements. Thank you. So next is the reflection on the importance of understanding SST. Firstly, ensuring legal compliance with SST means businesses must follow the tax regulation set by the government, including accurate reporting and timely payment. Failing to do so can result in fines, penalties or audit. Secondly is understanding SST help businesses manage costs by incorporating tax into their pricing strategies. This proactive approach ensures that businesses don't face unexpected financial burdens and can make smarter decision making when planning their budget or pricing structures. Thank you.